Welcome back, everyone, to a performance snapshot for the HFRX for the month of January 2025. Joining us is Ken Hines, president of HFR Index. Welcome back, Ken.
Thanks for having me on.
So, can you give us a rundown of the month of January?
Yeah, absolutely. January was a good month and an interesting one for sure. We're sort of continuing with the trend from November and December of seeing how the markets are responding to a lot of the changes that are coming through, the policy changes associated with the Trump administration. We know that there's a lot of change as it pertains to immigration, a lot of change as it pertains to trade and tariffs. And we're seeing how financial markets and how hedge fund performance is evolving as markets are adjusting to these changes. It's obviously been a very dynamic time, and we expect that to continue for the next few months. And performance has been good. The other interesting trend in the month of January came when obviously there was a competitive. I guess equity markets reacted in a very volatile manner to competition on new AI concepts. This one was called DeepSeek, and I'm sure there's other ones that will come to pass. And you really saw an intense volatility reaction from that new technology. This is something that I also believe hedge fund performance hedge funds are navigating these type of risk and volatility, and it's something that I'm confident will the influence of big cap tech earnings going forward, and something that will impact equity markets and financial markets in the coming months. I think we'll hear more of that, and that's kind of the whole situation that hedge funds are navigating as we conclude the first month of the year.
Okay, so as we look at the composite index for the HFRX, which strategies stood out?
Yeah, you can see here that the HFRX Global gained about 1%. Now that's below here we have US equities represented by the Dow Jones, which actually did much better than technology focused energies, sort of large cap US, gained 4.7%. Both the S&P and the NASDAQ were significantly lower than that, but that's what we have here. We also have the market directional index, which is a subset of the HFRX global constituents. It's ones that have a greater directional bias, both positive and negative, based on their clustering to the center of the cluster. 235 is the gain for the market directional index. The leading of the four sub-strategy areas was equity hedge. And again, we saw the influence of the volatile equity markets where we had gains for the month, but it came with a tremendous amount of volatility, particularly in the large cap tech area, 2.11% there for the HFRX equity hedge. Continuing though, relative value, we saw the Federal Reserve leave rates unchanged. And so fixed income based strategies gained about 0.78% for the month. Event driven, which obviously is a combination of exposure to corporate M&A as well as credit and equities, gained about 0.2%. And then narrow decline for the macro and CTA space, which, as you know, is lowest and least correlated with other hedge fund strategies and overall financial markets for the month of January.
Okay, and as we drill down into the sub-strategies for the HFRX, which ones performed well in January?
Yeah, you can see, probably not surprising to most of the viewers, that fundamental growth gained nearly 3%, 286 here. Really, that was the leading area of performance. And that obviously comes navigating what was a volatile month. It was a month that ended up being net positive, but we saw, as you know, significant declines in the market cap of some of the most widely held large cap technology companies. So those fall into the fundamental growth index, but certainly managers navigated this in hedging and trading around these volatile trends. Fundamental value also, which includes some of the more value oriented names, including consumer discretionary and energy and things and financials and healthcare, some of those are going to fall into the fundamental value, which also had a good month, a little bit less volatility than we saw in large cap tech. 1.8% gain there, 1.6% gain in fixed income convertible arbitrage index, which, as you know, that is categorically long bonds, long volatility, and short equities. That was a leading area of performance, you'll recall, from last year in the RV space. So continuing the strong performance there, 1.6% gain there, 1.35 in merger arb, which again, as we've talked about in previous performance updates, a lot of very high expectations for the M&A cycle, which we see unfolding or we expect to unfold in the first half of the year, really throughout 2025. There's a lot of these policy changes and trade changes and impacts of tariffs are passed through the different sectors and industries that they're impacting. This is likely to contribute to more M&A in the space. And then finally, equity market neutral, as we know, 1.25% gain there. And this is an area that really does well with very, very low or theoretically zero exposure to broader equity markets. So it's not impacted when equities are up 5% or down 5%, but it really does well when you see some type of mean reversion from widely dispersed or deviated market prices of equities to reverting to historically normal relationships. So that area, 1.26% for the month of January.
As we look back over the last 12 months, how is the composite index faring?
Obviously, we don't like to take too short-term a focus, just talk about a single month of performance because, 1 month is not enough observation. So for the January, we were just bolting on the trailing 12 months. So it gives us a little bit of a longer time frame to take stock of. But the results really aren't that different because you see here, market directional is the leading area of performance, gaining nearly 10% in the trailing 12 months, which is exciting. We talked about that index. And then equity hedge, the leading area for January, is also the leading area of the four main strategies for the 12 months. You have a 9.4% gain there. Just about a 6% gain for the overall index, which obviously includes the four main strategies that we're talking to here, as well as relative value arbitrage up 5.8% and event-driven up 4 2/3%. And so obviously continuing to have strong expectations for the event-driven space into 2025 as a lot of the lighter regulation and the trade policy shifts that we have already experienced in the month of January, expect more of those to take hold and impact the various industries.
And in the sub-strategies, if we take the long view?
Yeah, looking at the trailing 12 months, similar story as what we saw in the leading sub-strategies for January. So you really haven't seen a huge shift in the leadership here. Fundamental growth, 10.6% about there. Again, with the requisite volatility that we all observed, we know that large cap tech had another strong year in 2024, although there certainly were intermittent and intra-month periods of intense volatility. January, obviously one of them, going back to the August timeframe, we had another period of intense volatility. And that's just something that the managers in the space are accustomed to. They're used to dealing with that and navigating that, and they have specialized, hedging to try to mitigate some of that volatility. Convertible arbitrage, also leading area performance last year, leading area in January, also leading area in the past 12 months. 965, 964 is the performance there. Fundamental value, we talked about that earlier, just under 9% gain in the trailing 12 months. And then market neutral. So really the same areas that were leading in January are really the leading sub-strategy areas. So you continue to see strong performance and really not seeing a big change in leadership in terms of the sub-strategies that are driving performance. And that's a good thing. 7.5% gain for the equity market neutral index.
All right. Well, thank you for your insights, Ken. Do you want to wrap up for us?
Like as always, we if you're watching this video, we do regular performance updates on our YouTube channel. So please subscribe to it, and if you have questions or comments or things you'd like us to discuss on future performance updates, we're happy to do so. Please, if you'd like to set up a call, you can reach out to me directly, Ken Hines, or any of your contacts at HFR. Or you can send an email to our general box, indices@hfr.com, and I can get back to you. We certainly encourage everybody to visit the new website, www.hfr.com. Lots of great feedback on it. And then finally, last thing, when you do go to the website, we encourage everybody to click on the investor guidebook. You can view it, you can download it. It's something that we put together that really outlines the use case and utility for all of the families of investable indices that HFR operates and how institutions are using those in 2025. So thanks for your time today, and we look forward to our next performance recording.
Thank you, Ken.